If you've been wondering about what's going on in the real estate market, maybe you've been seeing some of the doom and gloom headlines. Well, today I'm going to review an article by Lance Lambert in Fortune magazine, and I'll give you some local statistics to compare it to so you can get a feel for what's going on in the Montgomery County real estate market right now. All right, well, let's dive right in. So this is an article written by Lance Lambert in Fortune magazine, December 22nd. I'm also going to, as we go through it, I'm going to throw in a few local statistics for you just to give you a sense of what's going on in our local market and how it compares to some of the national numbers. So where are home prices in America's 400 largest housing markets headed in 2023? These 5 charts will give us some clues. So nationally, home prices rose for 124 consecutive months between February of 2012 and June of 2022. And now we're in reverse. Through September, the seasonally adjusted Case-Shiller National Home Price Index has posted 3 consecutive monthly declines. Actually, since this article was written, the Case-Shiller's most recent report has come out, and it's now 4 months worth of declines. So this is the second biggest home price correction in the post-World War II era. It's a distant second to 2007 and 2012 at 26%. So one of the things is, as with any set of experts, anytime you put a bunch of experts in a room, you're going to get a lot of different opinions. Industry insiders remain divided on what the ongoing price correction is going to look like in 2023. So there's a lot of sort of push and pull between supply and demand. So on the demand front, things remain slumped with mortgage purchase applications down 38% year over year. Although in the past few weeks, because interest rates have moved down some from their highs in the 7s, they're now down in the 6s, and a week or two ago, there were a lot of mortgages that were available in the high 5s. So that's given a little more juice to the market as far as that goes. So on one hand, if financial conditions ease and mortgage rates fall in 2023, then demand's going to increase. On the other hand, a lot of people would say that there's been this sort of pull forward of demand during the past couple of years. A lot of people made moves who might have waited a little while. And so will that have an impact on what's going to happen in the next couple of years? Well, we're just going to have to see. Now let's move on to the supply front. Things are still pretty tight nationally, although there's some big variations, which we'll go into a little bit later. New listings on Realtor.com are down 17.25% on a year-over-year basis. And part of that is driven by the fact that a lot of people who would normally be move-up buyers latched on, refied, got those amazing 2%, 3% mortgages that were available, and they don't want to let go of them. So on the demand side, if home buyers pull back and homes sit on the market longer, then that's going to increase inventory, even if there are less new listings coming on the market. So here's another one of these maps that I like so much. This is how much inventory levels have shifted over the past 12 months. And so you can see that it goes from negative inventory. There looks like there's one dark red, and then there's a few sort of light reds kind of sprinkled in here and there. But mostly it's in the blue, which shows that inventory has moved up. And if we move over to the DC metro area, you can see that inventory is up 19.6% year over year, while national inventory levels on Realtor.com are up 46.8% year over year. The picture varies significantly by market. Cities like Austin and Phoenix have seen their inventory levels go up 160.7% and 176%. Meanwhile, markets like Chicago and New York remain virtually unchanged. And DC sits sort of in the middle, which is often where we see our metro area when I'm looking at national stats. Every quarter, Moody's Analytics assesses whether local fundamentals, including local income levels, can support local house prices. And if a regional housing market is overvalued by more than 25%, then Moody's deems it significantly overvalued. The pandemic housing boom saw the significantly overvalued camp skyrocketed from 3 markets in the second quarter of 2019 to 210 markets by the second quarter of 2022. These frothy markets include places like Boise, overvalued by 74%, and Austin, overvalued by 61%. As you can see, the DC market is sort of in the middle. Inventory's up 19.6%, and the overvalued percentage 30.9%. So what you're seeing now is that the significantly overvalued markets are shifting more quickly in terms of inventory moving up and prices softening. So how much inventory levels have shifted over the past 3 years? This is another interesting map, taking a little bit of a sort of bigger picture view. Again, as you can see here, if inventory's up, you've got Boise and Las Vegas, Phoenix, but in a large part of the country, inventory's still down. And moving over to DC, to the DC metro area, inventory is still down 25.5% over November of 2019. In total, there were 751,544 active listings on Realtor.com in November of 2022. So that's up from November of 2021 at 511 and 683 in November of 2020. However, if you scroll back to 2019, there were 1.14 million houses for sale in Realtor or listed in Realtor.com. Some firms like CoreLogic and Home LLC doubt that U.S. home prices are going to fall in 2023, with inventory being as tight as it is. While a lot of other people, including the researchers at Morgan Stanley, think that those housing bulls might want to reconsider their stance. The researchers at Morgan Stanley expect that U.S. home prices will decline 10% peak to trough, even though inventory remains below the 6 months that is sort of the standard for balanced. I have said for a long time that I think that 6 months is probably too high, at least for this area. And I'm starting to hear stuff in the real estate press that a lot of people think that it's time to reconsider that sort of benchmark and rethink it in light of what's going on in today's real estate market. If you're a bit of a real estate nerd and you'd like access to the most current stats on what's happening in our local real estate market, or any zip code in the country for that matter, then you'll want to click on the link below to get access to my Altos research portal. Altos is used by agents, brokers, and investors all over the country to keep their fingers on the pulse of the market, and you can have access to the very same data all for yourself. So some people would ask, how can home prices fall even if inventory levels remain so low? Well, so Rick Palacios from John Burns Real Estate Consulting, when demand abruptly falls off a cliff, the absolute level of supply isn't as relevant. This is where watching the rate of change on both supply and demand separately is critical. Now, so I did a little research on what's happening locally. And so if you look at seasonality, I'll go to the chart that shows what's happening in Bright MLS, or what's happened in Bright MLS. And you look peak to November from 2013 to 2021, the average decrease in pendings in the DC area was 35%. So that's just the normal seasonality ebb and flow of demand. 2022 is 51%. So certainly above the average for the past 9 years. But some of that 51% is wrapped up in what would happen most years anyway. Another thing that Rick Palacios noted, investors accounted for the highest percentage of buyers ever in this housing cycle in many markets, and that the lion's share of those buyers are now on the sidelines, and some of them will need to sell because they're over leveraged. And they were just taking a sort of a flyer, a gamble on home price appreciation, continuing to go even higher. Well, those days are over now, and those sellers don't exhibit the same emotional, behavioral qualities associated with traditional owner-occupieds. And generally, owner-occupieds tend to be hesitant to sell if they perceive that it's not a good time. They'll hold, they'll stay, and they create what a lot of people in the business call sort of sticky pricing on the downside. Heading forward, John Burns Real Estate Consulting expects inventory to rise even further next spring. Okay, so this is the greater DC area going back to December of 2012. And this shows active listings, and you can see the normal seasonal ebb and flow. That basically starting at the beginning of the year, depending on the weather and a bunch of other variables, you can see that every year inventory goes up and then it goes down and up and down. And it's a very regular seasonal ebb and flow. Not so much when you got over into 2020 because of the pandemic, but back again in 2021 and 2022. So some of what's going to happen this spring is what regularly happens just about every spring. John Burns is predicting that national home prices, peak to trough, are going to be off by about 20 to 22%. So there was an interesting graphic that I saw in another article in Fortune magazine. So I'll pop over to that for a second. So here we go. So this shows that what's going to happen with prices if peak to trough pricing is off by 10%, that would roll U.S. home prices back to October 2021 levels. And if there's a 20% peak to trough drop in U.S. home prices, that would take us back to February of 2021. Moving on. This was a good graphic that shows, there's actually two here. This one shows the 36 markets out of the top 400 where inventories moved back to pre-pandemic levels. Unfortunately, I can't share this graphic with you because it's behind the Fortune paywall, but you can see the cities listed here, and if you click on them, it moves them around. So you can see Boise City, for instance, which is one of the places where prices moved up more than just about anywhere else in America. So among the country's 400 largest markets, 36 markets are back to pre-pandemic housing levels. I hope you get some value out of this video. If you do, please take a minute to hit that like button. That'll help the YouTube algorithm to put this out there for more folks who'd be interested. Thanks. Now we'll scroll down here and we've got the chart for the 364 housing markets out of the 400 where inventory remains below pre-pandemic levels. And here's the DC chart. So you can see that we're roughly 10,300 from 13,877. We're still off 25.4% over pre-pandemic housing inventory levels. One more quote from Morgan Stanley, from the Morgan Stanley researchers. They don't think that tight inventories going to prevent home price declines. They do think that it will prevent a 2008 style crash. Although supply doesn't keep home price growth floored at zero, we do believe it prevents home price declines from becoming too large. As is often the case, the DC market is kind of nestled in the middle of what's going on nationally. Our market is a bit more insulated from the highs and the lows that you see in other parts of the country. If you'd like to see a recent video that I did about the hot and not so hot zip codes in Montgomery County, you can click over here. And if you'd like to subscribe to my channel so you get updated whenever new videos come out, click over there. Have a great rest of your day, and I'll see you on the next one.